How's it going, everyone? It's Sam. I want to go through a three-prong approach to investing. This includes having some crypto, having some stocks, and having some Bitcoin as well. I want to go through that along with a couple pieces of news from today. If you don't mind, hit subscribe, turn on the bell notification underneath the video so you can see future videos just like this. Also, if you do want to trade crypto, there's a link underneath the video to WEEX. They have a deposit bonus of 20% right now on your first time deposit. So definitely check this out underneath the video, read the terms and conditions. They don't KYC, and you don't need to use a VPN to get on their platform. As you can see too, we have links to CoinW, Blowfin, BTCC underneath the video. You can see I'm up significantly in some of these trades I made earlier this week on CoinW, 100%. So if you want to get in on this too, you can see Bitcoin moving up, gold hitting new all-time highs. Even throughout the day today, it continues to rally up to 3,256. Usually gold actually leads Bitcoin just by a little bit, so maybe a good indication for Bitcoin. We are right at the 20-day EMA, so I'd be paying attention to that. It's right around the price that we're at right now. We've been rejected by it over and over, so definitely some resistance there. Larry Fink says we're very close, if not in a recession right now. Ooh, that's not what you want to hear from the largest asset manager in the world. But there's so many eyes on tariffs, and it's so volatile. I don't think anyone really has a good feeling for what's going to be happening next week in the market, or 2 weeks, or a month, or 3 months. No one knows whether a deal with China is going to be worked out or not. But right now, the market is freaking out. I mean, it's pretty clear that China is most likely dumping U.S. Treasuries. You can see the 10-year up 0.137 today. Like, these are insane rallies. Over the last year, you can see so much volatility. This has really affected like long-term interest rates, like mortgages. Over the last 5 days, though, we went from 3.9 all the way up to 4.53. So, I mean, we're talking about nearly a 15% move in less than 5 days. This is insane, and it's really freaking out the market. I mean, the market does not like this kind of volatility. There are a lot of traders and a lot of hedge funds that use treasuries and bonds and use leverage on them, and they're being forced to dump. And China most likely is selling U.S. treasuries to go buy gold as well. I mean, keep in mind, gold's nearly a $20 trillion asset, and it's moving up 2.5% in a day. I mean, we're talking about tens of billions, if not more, dollars have to go in to move gold this much. DXY is falling as well. This is fascinating. The last 2 times that we've fallen down below 100, like convincingly, we've seen a massive bull run. I mean, you can see 2017, 2020 as well, massive bull run as the DXY fell. And right now we've been flirting around with this level. We did just hit a new low yesterday of about 99, but we've been close to this before. So I would love a further move. Obviously, like 97 would be a pretty significant level below 100 to hit. And hopefully that signals that maybe some interest rate cuts are on the way. We'll have to see. The market is pricing in now no rate cut at the next Fed meeting, but a lot of that is due to tariffs, and tariffs can change so quickly. So no one really knows what, like I said earlier, no one really knows what's going to happen next week. Now, I am still buying, right? We still have a lot of uncertainty, but typically that's a good time to be buying, because when there's certainty, the market is priced much higher, right? You're getting Bitcoin at a 26% off or 26% discount from all-time highs because there's uncertainty. There's been so much good news, but yet there's still uncertainty over tariffs, over trade relations, over economic policy. Same thing with VOO. You're getting it 15 to 20% off because of the uncertainty moving forward. Now, with that in mind, I'm not taking I'm going in 100% on Bitcoin approach. Actually, Brian Harrington, who has been buying Bitcoin and living off Bitcoin for a while, but he's been buying Bitcoin for, I believe, a decade. Someone that I've had on the channel before says a portfolio of 4.15 Bitcoin plus 2 rental properties handles volatility better than a portfolio of 6.15 Bitcoin. So basically saying, hey, if you put $80,000 down on a rental, it's a $400,000 property. it's going to handle volatility better than just having that extra money in Bitcoin. It also will grow your net worth faster while blunting drawdowns because you can buy real estate with 80% leverage, safer than you can buy Bitcoin with 80% leverage. Okay. So basically you're able to 5x leverage real estate. And that's really why real estate investors have gotten so wealthy over time. It's not because of just the amount of appreciation. It's because of the leverage on that appreciation. So if you don't know what I'm talking about, and I'll give you my approach right now as well, what I'm doing in the market, and what I think about this. But if a rental property goes up 3%, it appreciates by 3%, and you own it in cash, well, great. Your $400,000 is now worth $412,000. Great, 3%. But if you only have 20% down, that leverage is 5x, or you're on 5x leverage. So you get that same $12,000 gain in property value, but you only have $80,000 into it. So your return is 5 times greater. You're able to get a 15% return instead of a 3% return. Also, you might get some cash flow over time. Right now, there aren't a lot of properties that you can put 20% down on and cash flow real well. But you also get some tax benefits. You also can pay down the mortgage. So even on a property that just breaks even, you're probably, if you get average appreciation, let's say of 3%, you're probably getting closer to a 20 to 25% return. Again, assuming it's zero cash flow after all CapEx, like future improvements are accounted for, property management, like after all that's accounted for, if you get zero still, you're still getting a really good return, 20 to 25%. So that's how real estate investors have done so well. They've been able to consistently get 15 to maybe 30% returns year after year. And if you stay leveraged and you keep on pulling out equity to put in more rental properties, that compounds really fast. Now, Bitcoin has a better appreciation rate over time, but also there are periods where it's done nothing. So if you buy or sell at the wrong time, you don't really get that much of a return. And it's extremely volatile. So that's where Brian says, hey, have that Bitcoin, but also own some rentals, right? You're going to get less volatility. You'll still, I think you'll get a lot of upside, but also mentally, it's a lot easier to deal with the volatility. If you know, hey, yes, I could have more Bitcoin, but I have these rental properties that are appreciating very quickly. I'm not worried about the Bitcoin because not all my chips are in one basket, right? Not all my chips are on the table at the same time. I have multiple things that will help me retire one day, multiple assets, and eventually those rentals will start spitting off some cash flow. You can also refinance them, pull money out, all that kind of stuff. So I really like this approach. I actually include stocks, and I actually said this as well underneath. Let me pull that up. I'm taking a 3-prong approach: real estate, Bitcoin, and stocks. Stocks add liquidity, and while they do fluctuate in price, they will bounce back long term. There's much less concentration risk than a single property as well. So I have a significant amount in the stock market. I have a significant amount in Bitcoin and a significant amount in real estate. Stocks are probably going to perform the worst for me, but also it's the least amount of effort. Even compared to Bitcoin, I can literally just log in with my face or with my phone, and within 20 seconds, I can buy something. Bitcoin, similar thing, but you have to withdraw it. There's some risk to that, and it's just much more volatile. So I realize that Bitcoin and real estate will probably outperform, but stocks are just so liquid, and generally they have less volatile swings. I think of it as kind of a risk. Almost risk off, right? I know that we've fallen down a lot, but VOO or the S&P 500, it's going to bounce back and it's going to appreciate by 10% annually. So I use that as well. There might be times where Bitcoin or real estate are on such a discount that I sell off some stocks or some VOO to go buy those assets. And real estate's great. It's going to appreciate by 15 to 25%, depending on the property. And depending on the leverage that you take out. Bitcoin probably going to appreciate maybe a little bit better than that, maybe 30, 35%. But again, it depends on when you're buying and when you're selling and when you're looking at it. So I'm taking this 3-prong approach. I also have cash, which I'm dollar cost averaging into the market. And I think it's important to have some of that too, just so mentally you are okay with the volatility. Of course, this isn't a one size fits all, right? Some people can't afford rental properties. I get that. Some people can't afford 4.15 Bitcoin. We're talking about big boy numbers here. We're talking about hundreds and hundreds of thousands of dollars that you have to be able to put into the market or put into these kinds of assets. If you're not there yet, okay, just continue stacking, continue to increase income, right? Play the long game. Because if you're even watching a video like this, you're probably going to be better than 98% of people out there when it comes to retirement. So just continue to dollar cost average, and I'm sure you'll be fine. Let me know your thoughts. Let me know what kind of approach you're taking. Like, I do have some altcoins in there too that I didn't talk about, but I do have some smaller positions in altcoins. My stock portfolio is a little bit more than 50% S&P 500, and then I have some major tech stocks outside of that, a couple dividend plays as well, and then I have been diversifying with real estate. But of course, let me know your thoughts. Thank you so much. If you do want to check out the links underneath the video to start leverage trading, check them out. Thank you. I'll see you in the next one.